Welcome to the Deep Dive. We're here to help you get, truly well-informed on some really fast-moving, often complex topics.
That's the goal. Cut through the noise.
Exactly. And today, we're plunging into real-world asset tokenization, RWA tokenization.
Right. It's getting a lot of buzz, being called a genuine disruption in finance.
So what is it fundamentally? It's basically taking ownership rights of assets, physical things like buildings or even non-physical things.
Yeah, like intellectual property.
Right, and putting those rights onto a blockchain as tokens.
It's a big idea. It promises a pretty revolutionary shift in how we own and trade stuff. The aim is a much more open, more efficient system.
Okay, so our mission today for this deep dive is to really unpack that. The potential, which seems huge, especially looking at one specific player, Rexas Finance RXS.
But it's not just the shiny potential, is it?
No, exactly. That's where it gets really interesting and frankly complicated. We're going to explore the other side too. Very different, sometimes quite alarming experiences and views from people actually involved.
So you get the full story, not just the hype.
That's the plan. A complete nuanced picture so you can, be genuinely well informed.
And for this, we've looked at, quite a mix of sources, financial news, market analysis reports.
Standard stuff.
Right. But also, and this is crucial, direct comments from online communities, places where real users are sharing what actually happened to them. It's quite a contrast.
Definitely. So let's kick off with the big picture, RWA tokenization. Why is this even a thing?
Well, you look at traditional asset trading, buying stocks, real estate, whatever. It often involves, limited access. It can be slow, lots of middlemen taking a cut.
Yeah, fees everywhere. It takes ages.
Exactly. Tokenization basically promises to just sweep those obstacles away.
Okay, so how does it do that? What are the supposed benefits?
Well, the big one is fractional ownership. Think about it. You could own a tiny fraction of a famous painting or a piece of a skyscraper. Things usually way out of reach.
Right. Democratizing investment, sort of.
That's the idea. Plus, reduced transaction costs, settlements that happen almost instantly, not days later, better liquidity, easier to buy and sell, and more transparency because it's on the blockchain.
And it's not just for buildings or art, you said?
No, the potential scope is massive according to the sources. Real estate, art, luxury goods, commodities like metals or grain, even intellectual property rights.
Oh, wow. Okay. And is this catching on? Is there real money involved yet?
Oh, yeah. It's not just theory. The RWA tokenization market was apparently valued around $118.6 billion by September 2024. So already pretty substantial.
$118 billion.
And the forecast, they're talking potentially $1 trillion global market by 2030.
$1 trillion. That's ambitious.
Hugely ambitious. Shows the scale of the expectation anyway.
Okay, so into this rapidly growing high potential space comes Rexas Finance, RXS. How do they fit in?
Well, they position themselves as a, quote, pioneering platform designed to make tokenizing real-world assets simple, democratic even, building a bridge, they say, between traditional finance and blockchain.
Sounds good. Do they have specific tools or features they highlight?
They do, a whole suite, apparently powered by AI.
Yeah.
There's Rexas Gen AI, which they say automates financial analysis, helps with decisions. It can even create NFT art from text prompts.
Okay. Interesting mix. What else?
Then there's AI Shield. This sounds pretty important. It supposedly scans smart contracts for risks, tries to prevent scams, losses, offers automated auditing, real-time monitoring.
That AI Shield.
Yeah.
That sounds like something the crypto space desperately needs.
Yeah.
Does it actually work as advertised based on what we've seen?
Well, according to their materials, it's meant to be a key security feature. Whether it prevents everything in practice, that's maybe a different question we'll get to.
Right. Okay. What other tools?
They also list a quick mint bot, lets users launch tokens without coding, even through Telegram and Discord.
Making it easy for anyone to create a token then.
Seems to be the idea. And the Rexas Token Builder, another no-code tool, supporting common standards like ERC20, ERC721 for NFTs, and ERC1155.
So tools for creating assets, what about launching and managing them?
Yep, they have the Rexas Launchpad, helps new projects get funding, build a community, and Rexas State, specifically for that fractional real estate ownership we talked about.
Okay.
And one more that caught my eye, Rexas Treasury. It's described as a multi-chain yield optimizer. It automatically finds, supposedly, the best profit opportunities across different blockchains like Ethereum, Binance Smart Chain, Polygon.
Like a little robot investor finding the best interest rates for you across the crypto world.
Sort of, yeah. That's the pitch. automatically optimizing your yield.
So the claimed applications are broad then? Real estate, art, commodities?
Very broad. They talk about revolutionizing real estate, transforming art, enhancing commodity trading, even optimizing traditional things like stocks and bonds if tokenized. It's a very comprehensive vision they're selling.
Okay, let's talk money. The pre-sale.
Yeah.
How does that supposedly go, according to the positive sources?
Pretty strong based on their claims. One report said they raised over $22.4 million by the 9th stage, with the token at about 12.5 cents.
Okay.
Another source, though, mentions nearly $56 million raised, selling almost 500 million tokens out of a billion total supply through a 12-stage pre-sale, and attracting, they said, over 53,000 holders.
56 million. That's a serious amount of money raised before even launching properly.
It is. The final pre-sale price was apparently $0.20, and they aimed for a public launch price of $0.25.
And they made a point about this being a public pre-sale, right? Not just big VC money.
Yeah, they emphasize that, trying to show broad participation. And they mentioned security steps too, a CertiK audit, which is a common third-party check in crypto.
CertiK audit, okay.
Yeah.
And plans for exchanges.
Plans to list on 3 big ones, Tier 1 exchanges like MEXC, Bitmart, LBank, to get more visibility, more liquidity, make it easier to trade. It looks professional, presented that way.
So, given all that positive spin, the price predictions must have been pretty optimistic, too.
Oh, absolutely. Some analysts, quoted in these sources, suggested RXS could hit 50 cents by late 2025, maybe even $1 or more.
$1 from a 20-cent pre-sale price. Decent return if it happened.
And some were even more bullish. There were mentions of analysts predicting $150 by 2030, driven by, the whole world adopting blockchain.
$150? Wow. Okay, that's extremely optimistic.
It certainly paints a rosy picture.
Right, but then we started looking at the other sources, the user comments.
Yeah.
And things took a very sharp turn.
Yeah, this is where the counter-narrative really kicks in, and it raises a huge question. How do these glowing reports and massive predictions line up with what actual users were saying?
Because of the core issue, reported by many, many users, was pretty stark. They bought RXS, sometimes just $50, sometimes thousands, like $4,000.
Different levels of investment.
But then they found they just couldn't sell it. The money seemed, lost. Or the tokens just vanished from their crypto wallets, like CoinBase wallet or Trust wallet.
That sounds bad. Users started throwing around terms like honeypot.
Explain that quickly.
A honeypot is basically a trap contract. It lets you buy the token, but the code somehow prevents you from ever selling it, so your money is stuck.
Or they mentioned rug pull.
Right. That's where the developers hype the project, maybe sell a lot of tokens, and then just dump their own holdings, crashing the price to zero and disappearing with the funds.
So really serious accusations flying around in these user communities.
Very serious. And specific red flags were being pointed out.
Yeah.
Liquidity, for instance. People reported seeing messages like, Rexas trading is disabled, or just that the liquidity was too low for the token, meaning there just wasn't enough money in the trading pool to let them sell.
Couldn't cash out.
Effectively, yeah.
For many.
And what about those promises? You mentioned the white paper. Users got suspicious about vague promises of future trading, and some alleged the white paper actually changed, that the number of tokens allocated for the presale increased from 425 million to 500 million.
Why would that be a red flag?
Well, some users interpreted that as meaning the presale will never end. Like they just keep extending it to raise more money without ever properly launching or enabling selling.
Okay. Constant presale, no actual market. Got it. What about the price itself when it did supposedly launch?
Big discrepancies there, too. The official launch price was meant to be $0.25, remember?
Right.
But users reported it hitting the MEXC exchange at just ear and tall tenths and then crashing fast down to 2 or 3 cents.
Ouch. A huge drop immediately.
Yeah. Now, some people were apparently claiming, maybe hopefully, that it was trading way higher, like $0.53 on decentralized exchanges like Uniswap, but others quickly disputed that, saying it wasn't possible or the liquidity wasn't there.
So conflicting information even on the price. What does a neutral tracker say now?
We checked CoinCarp, a crypto data site. It showed a price recently of around 0.006. So way, way down from any of those earlier numbers.
0.006. Okay. Practically worthless then.
Compared to the pre-sale or initial listing prices, yeah.
Were there other warning signs users mentioned?
Yes. Allegations about how the tokens would be unlocked for pre-sale buyers. Not all at once, but, quote, weekly at low percentages.
And the concern there was?
Users feared this slow release gave the project team time to, dump their own tokens or let the project collapse before regular investors could even get access to sell theirs.
Delaying the inevitable crash until the insiders were out?
That was the fear, yes. And maybe the most damning thing, claims that this wasn't a one-off.
Wait.
Some users were saying the same company does it over and over. They were trying to link Rexas Finance to other projects like Redic and Quebetics, alleging they followed the same pattern. Big pre-sale hype, then a collapse or rug pull.
A pattern of alleged scams by the same group? That's a major accusation.
It is. Very hard to definitively prove without inside knowledge, but that was certainly part of the user narrative.
And how did Rexas achieve that initial hype? You mentioned those positive articles earlier.
Right. This became a huge focus of the user complaints, the role of promotional content. People pointed to paid articles they have hosted on reputable sites. You know, big names like MSN.com, Crypto Daily, even mentions of Times Magazine, the Tribune.
Wow, those are mainstream outlets.
Exactly. And users saw this as a deliberate strategy to create FOMO. Fear of missing out, making it look legitimate and exciting because it was featured on well-known sites.
But were these actual news articles or?
That's the thing. Users called them out as paid articles, essentially advertising disguised as journalism.
Yep.
One Reddit post apparently did a deep dive using a Crypto Daily article as an example.
And what did that analysis find?
It highlighted classic red flags within the promotional piece itself. Things like wildly exaggerated claims turning $450 into $45,000, completely unverified projections like 100x growth, lots of hype about the pre-sale price increases, which, of course, the project itself controlled entirely.
So creating artificial momentum.
Exactly. The analysis also noted that claims about the community were sometimes contradicted by data showing large whale buys, suggesting maybe it wasn't as grassroots as claimed. And crucially,
Yes.
a disclaimer, often buried at the bottom, indicating it was promotional content, sponsored content, paid advertising.
So using the reputation of legitimate sites to push what was essentially a paid ad full of hype.
That was the accusation, yes. And it clearly worked on some people.
It creates such a confusing picture, though, because you said some users claim they could sell.
That's right. It wasn't universally impossible, it seems. Some people did report successfully swapping RXS for other crypto like USDT or ETH, but many others insisted they could not. Why the difference? Hard to say. Maybe timing, maybe specific exchanges, maybe luck.
But for those who felt stuck or scammed, what recourse did they have?
That's the really tough part in crypto. Users talked about trying to file claims with the SEC or contacting exchanges like CoinBase for help.
Right.
Often they were just directed to private channels or told the exchange couldn't do much. It really highlights that decentralized aspect. There's no central authority, no internet police to call. Victims often have very little recourse. You end up with this really divided community online. You have people absolutely convinced it's a scam, sharing their lost stories, and then others defending it, maybe pointing to the initial hype, the big names involved, or just hoping it will eventually recover. A real split.
Okay, let's try and unpack this whole situation.
Hello.
You have this incredibly promising technology, RWA tokenization, with massive market potential. Then you have a specific project, Rexas, with this slick presentation and ambitious vision.
And claims of huge pre-sale success and AI tools.
Right. But completely contradicted by widespread user reports of lost funds, inability to sell, and a ton of red flags pointing towards a potential scam or at least a major failure. How does this happen?
I think a key thing to grasp here is the asymmetry of information, especially in these crypto pre-sale.
Asymmetry of information, meaning?
Meaning the project team knows everything and the potential buyer knows only what the team chooses to tell them, often through that polished, hyped-up marketing. You're essentially investing blind based on promises before the thing even really works or has any real market liquidity.
So the project controls the entire narrative at that early stage.
Completely, which is why those turned $450 into $45,000 claims and paid articles can be so effective. They're playing on hope and FOMO, and there's little independent data yet to contradict them during the pre-sale itself.
So the takeaway there is you absolutely have to look beyond the official hype.
Definitely. This whole case just screams that in decentralized finance, probably your most crucial asset is independent verification. You have to look for outside evidence.
What does that look like?
Is the project's claimed success reflected in actual real-time market data from neutral sources? Are non-affiliated users in independent forums confirming the positive story, or are they raising alarms? If the official story and the ground truth don't match, that's your biggest warning sign. Look beyond what they want you to see.
It really highlights the gamble of getting in early too, doesn't it?
Oh, massively. Pre-sales offer that lure of huge returns if you pick the winner, but the risk is enormous. You're buying something before it's proven, before it's liquid. Like that user said, crypto is like gambling. Very few rolls, use at your own risk. It's blunt, but
Often true, especially at the fringes.
yeah. And it connects back to that decentralization point.
The double-edged sword.
Exactly. It allows for amazing innovation. This whole RWA concept is potentially game-changing. But that same lack of central control, no regulators stepping in easily, no internet police, it also allows for exploitation. Once a potential scam is running, it's very hard to stop, and getting money back is even harder.
So for the average person trying to learn about this space, or maybe even invest, it's incredibly challenging. You've got the slick marketing on one side and these passionate, angry warnings on the other.
It really hammers home the need for serious due diligence. Go beyond the project website, beyond the glossy sponsored articles, dig into independent communities, look at the blockchain data if you can, check what neutral analytics sites are saying. Does it function in the real world?
Right. Okay, so wrapping this up, we've journeyed through the incredible promise of RWA tokenization, huge growth predicted, the vision of democratizing assets.
And we saw how Rexas Finance presented itself as a leader in that space, with ambitious tech and big claims.
But then contrast that sharply with the, frankly, bleak realities and serious warnings from a large number of users who felt burned, reporting lost money, red flags, and potential manipulation.
It's a stark difference.
The overall transformation RWA promises democratizing investment, making markets more efficient, transparent, accessible for everyone. It sounds fantastic.
It does. The potential is undeniable.
Yet this deep dive really forces the question, how do we as individuals trying to learn or maybe participate make sure this revolution actually benefits everyone? How do we avoid the pitfalls and the projects operating, shall we say, on the fringes? What stands out to why you listening now about navigating these exciting but clearly perilous new financial frontiers?